This video examines a disciplinary case, highlighting the critical importance of peer reviews, continuing education, and accurate reporting to regulatory bodies. We will cover the key findings, violations, and the resulting disciplinary actions, including a permanent practice restriction and financial restitutions. Welcome to an anatomy of an audit collapse, a clinical case study in systemic professional failure and regulatory remediation. This case involves a respondent's CPA under the jurisdiction of the California Board of Accountancy. The triggering event was federal intervention in December 2023, when the CBA received a formal complaint from the U.S. Department of Education. This led to a quality control review that resulted in a finding of a devastating failure and deemed the audit report unreliable. The collapse was a chain reaction, starting with missing education, which led to bypassed oversight. This resulted in execution failure, unsupported audit opinions, and ultimately, a federal collapse identifying the systemic failure. The causes for discipline are categorized into competency, execution, and ethical failures. These include gross negligence, failure to comply with professional standards and peer review requirements, and willful false statements to the CBA. Competency failures illustrate operating in the dark. The CPA had a CPE void, reporting 0 units of governmental CPE when 24 units were mandated. Furthermore, the licensee participated in 0 peer reviews, missing a key safety net required every 3 years. Execution failures are evident in the ASF engagement case study. Issues included opening balance blindness, with no verification of cash balances. The audit also featured a phantom risk assessment, blank bank statements as documentation, and a misidentified business type. The ethical failures involved willful deception. The licensee actively concealed administrative oversights by falsely reporting 0 engagements subject to peer review during both the 2021 and 2023 license renewals, despite having performed numerous GAGAS audits. This compliance gap matrix summarizes the failures. The licensee failed to complete peer reviews, report required CPE units, provide sufficient audit documentation, and truthfully declare peer review status on renewal forms. The cover-up enabled the incompetence. Evading quality control guarantees operational failure. Submitting false statements allowed the licensee to dodge third-party oversight, enabling severe knowledge deficits and unsupported audit opinions for 4 years. The resolution, Disciplinary Order AC 202450, involved the CPA admitting a factual basis for the accusation and waiving the right to a hearing. The baseline sanction was the revocation of the CPA certificate, which was stayed for a heavily monitored 3-year probationary period. The restricted practice blueprint defines permitted and prohibited activities. While general accounting services and tax advisory are permitted, the licensee is permanently restricted from performing audits, reviews, compilations, or any other attestation services. The probation dashboard outlines the remediation requirements. The CPA must pay $9,000 in financial restitution and complete a 180-day educational mandate, including a regulatory review and ethical leadership course, alongside ongoing quarterly compliance reporting. The universal takeaway is that professional standards are the load-bearing architecture of public trust. When an auditor circumvents quality control, they jeopardize the stability of entities and ultimately forfeit their right to practice. Oversight is not the enemy of practice. It is its guarantor. Thank you for watching this video. Please like and subscribe for more professional content.